Hey everyone, welcome to the Everyday Investor. I'm your host. I am Darcy Ungaro. Thank you for joining me. Investing has been a little bit tough this year psychologically. If you have been into property especially, yes, you would have seen the storm clouds gathering. I don't think overall we need to worry about that. It seems like the more that you understand about how things work with investing, depending on which avenue you want to go down, when you're doing it on your own, you can at some stage hit so much resistance that it feels like you've just hit a wall. You push through it, you try to invest a little bit more, try to tighten up the screws a little bit more on the budget. Now you can kind of feel inflation starting to push back on you. And so you kind of have to let up a little bit of ground just so that you can keep going. Where do you go though when your money muscles are bleeding out in the pursuit of that last unit of growth? Diminishing marginal returns may just be the fate of the average investor, but it doesn't have to be that way for the everyday investor. Not today. In the house of investing, the roof is strategy. The horizontal beams are diversified types of investments like managed funds and index funds and ETFs. Then the supporting pillars could be property, shares, gold, crypto, speculation, we'll call it. If you really want to go deeper into strategy or specific coaching around each of the investment pillars, then there's people that you can talk to. Just do your due diligence while ticking off your duties to do. Today, it's a coach for those who want to concentrate using a focused investment strategy with shares. Cole Hauptfuhrer is no stranger to the show, and many of you guys have probably heard him talk before. And here's what I can say. If you ever get a chance to talk with this guy, make sure that you're paying attention. I thoroughly enjoy our chats. I always learn a lot, and I hope you do today as well. I think you will. I know you will. Now, my guest today is a recovering anti-financial advisor, non-financial advisor who talks to people about how to make concentrated investments into the asset class of shares. This style of investment doesn't look like stock picking to me. It feels simply like it's about putting your investments where your eyes are. Engage the brain before acting on anything from any of the content in my shows, by the way, and please do seek the opposing opinion, if you can find one, before you take informed action. You'll likely listen to this one more than twice, so allow for that in your day today. All right, let's get started. You're listening into the Everyday Investor Podcast. Passive investing, property investment, managed funds, and crypto. If you're an everyday person wanting to build new wealth for the new world that you're heading into, then this podcast is for you. I'm Darcy Ungaro, your host. I'm a qualified financial advisor, but I'm still learning how to invest better and teach others how to do the same. I talk with guests and cover a range of topics designed to get you to think for yourself here. But please keep in mind, this can't be considered financial advice. Be sure to do your own research here and seek qualified advice of your own before making investment decisions. If you want more information, check out the show notes in your podcast player and make sure that you've subscribed to YouTube also. Then follow the Everyday Investor on all social media channels. The NZ Everyday Investor Podcast receives support from the following partners: Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand; Gorilla Technology, increasing business success through innovative and strategic IT solutions; Ungaro & Co. Financial Advice for everyday people building everyday wealth. Hope you enjoy the show. Let's get started. For those that are new to the show who haven't kind of gone through our extensive back catalog now and discovered the other episodes that we've done, can you explain to our listeners what you do, who you are, how you work?
Sure thing. My name is Cole Hauptfuhrer. I am the chief executive fishmonger of Find Fat Fish. It is a done-with-you alternative financial education service designed to help wannabe retirees make more by investing as a hobby long-term than they earn in their jobs, with the intention of having it be not that they're making money for money's sake, but that they're solving two problems, working backwards from just feeling the terror and weight of being under those problems. Those problems being, I work because I have to, not because I want to. And I am absolutely horrified that if I don't create some kind of a shift and upgrade in my trajectory, I am going to go bankrupt as an older person for being an older person. I'll either never retire or I will outlive my money. And so basically I have an 8-week course that is custom crafted and personalized to help people that are dead serious about showing up and solving those problems, to do so psychologically in short order, and then feeling that their ability to do so financially long term is now a when, not an if, and an inevitability rather than like some impossible possibility.
You have a way with words. Where does that come from?
Oh yeah, so my well, thank you first of all. Back at you. My 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 background in terms of academics and like formal training is in creative writing, screenwriting, aggressively offensive comedy, and my dad, who, for context, was, how do I paint his picture concisely? He was a fighter pilot in Vietnam, and then he ended up being sort of one of like the old boys on the ground selling bonds in like the bond business in Wall Street in the 80s, and then the hedge fund guy. So it's kind of like a, a bad, tough, hard-nosed financial type. And so when he found out that his youngest son was studying screenwriting, I was in uni, as the Kiwis would say, and I got a phone call where he said, listen to me carefully. A man can leverage money or a man can leverage time. And you doing this have to learn how to make money with your money, because you will not make money with your time. And so he pulled me out of university and he taught me investing an hour a day on a cruise ship that he was living on at the time. And by the end of the second hour, I had everything that I needed to start, and most of what I've needed to not need a 9 to 5 because of my ability to make money with my money. And after a certain period of time where his there was aspects of what he was saying on the investing side that I didn't agree with at all, but what he said that I did agree with was so powerful, much more powerful than my creative writing background, needing to rely on leveraging screenplays for money, et cetera, that I asked myself, I was like, is there a way to use creative writing, peer tutoring, and amateur investing to do for any normal person what he did for me? And can I sort of take my English major background and use that as a major asset in the education of investing? So that was kind of the fusion, which started to take place in about 2011.
Sure. So ironic, you were on a boat and you were being taught how to fish.
Yes, exactly. And Fine Fat Fish was years away from being thought of as like a name for it. But eventually, yeah, Fine Fat Fish came about as a result of a collaboration with a really talented artist in Brooklyn named Steve Wosterval and his wife Pia, who basically, we were thinking about, what is a metaphor for financial independence? What is a metaphor for being on the other side of the problem of being scared about where to invest every dollar that you've ever made and every dollar that you'll ever make? And to us, sort of a really nice metaphor for it was this fat fish, this cartoon fish made out of money symbols, this sort of like Mickey Mouse of money that symbolized sort of the end result of teach a man to fish versus feed a man a fish. And so by teaching yourself how to catch a fat fish, you will never again rely on anyone other than yourself, because you will be self-sufficient in that way.
Let's go back to your dad and the education that he imparted onto you. It's something that, it's a theme that I guess with the work that I do, I probably loosely touch on it with everybody I talk to. And it's this idea of intergenerational wealth transfer. And most people, most of the time, will probably focus on what's inside the container. We're trying to get enough wealth. We're trying to get financially secure, make sure our retirement is okay so that we have surplus and we can pass it on to our kids and give them a start. And the assumption being that they will figure out on their own how to do the things that you figured out, which created that surplus. Get out there and learn how to fish yourself, but to do it in a way, presumably, that helps you maintain that wealth, right?
Oh, absolutely. I mean, so for me, the sort of my values in creating the service and the business, particularly the service, was number one. And this is anything that any time that I talk to somebody who is feeling the itch of starting their own thing, but they don't know what to do, it's essentially like my values in this, and your mileage will vary, is how can I provide the service that I was blessed to receive? If someone hadn't done this for me, my life would be a shell of what it is. But then moving beyond that, and this is where mine is an expansion of what I got on the cruise ship, is how can I provide the service that I wish I'd received? And so to me, in my interpretation, the service that I was blessed to receive was essentially an angry, productive confrontation where it was like, you need to learn how to do this, and you will do it now. You will do it with my guidance. You will do it on the spot right now. And then what the expansion of it is, how do I actually, and with respect to my dad, like there was aspects of what he was bringing to it that were over academic, over numerical, under effective, that he just he couldn't see it simply because he'd been educated, gotten his MBA at Wharton, et cetera, et cetera. And so like, if you can actually come at it from a true beginner's perspective and simplify it even more, make it even more simple, how can I rip a decade or more off of somebody's development, off of the development of their human capital inside of a couple of weeks? And then put them in a position where they can stand on their own 2 feet as a self-sufficient investor, thinking and coming from an entrepreneurial mentality faster. And along those lines, to your point, you can't, obviously, anyone who's promising that they can guarantee financial transformation for you in 8 weeks is not only selling something, they're selling something that is dishonest. However, and I know this as a fact, and I think you do too, you can infuse that human capital transformation, that psychological transformation easily within 8 weeks. And then, to your point, it's not about handing somebody a bunch of money or even like a book of like pointers and then get out of the way. If you can permanently elevate their psyche and their human capital on this, the financial results will follow as long as they can find it in themselves to follow through. And that's what any good parent, in my opinion, not to be over judgmental, but like any good parent that believes this is doable should endeavor to do for their kids. I think the main barrier there is just that a lot of people don't think that it is possible. And it is obviously what any good teacher or coach should do for their like pupil or client, is help them achieve that permanent self-empowering before and after that then makes their ability to declare whatever they want and then go get it under their own power something that's available to them indefinitely.
You and I probably share a lot of the same way of, I won't necessarily call it a gift. It's probably sometimes like a curse, where you can kind of see the complexity in something, and you could probably, like looking over horizon, see the mountaintops and see how they all kind of connect to each other. To distill that into a form that is palatable for an everyday person to get, sometimes that's challenging. And for me lately, I've really been benefiting from just taking my kids to school and having a chat to them in the morning, because they're learning about stuff that's around the edges of this, about how to invest, how to grow wealth. And what does an interest rate mean, Dad? And what does it mean when I'm taking out a loan? And what does it mean when interest rates go up? And all these lead to conversations that I can answer 20 different ways, but it's all based on me trying to explain it at someone who's at the same footing as I am.
Yes.
To bring it down, I find that incredibly valuable. Like, it's challenging, but to bring it down, not by dumbing it down,
right?
Bring it down so that a 12-year-old can understand it. In the process, you end up reformatting complex things. You're distilling it, aren't you?
Well, it's interesting on a broad variety of levels, and I comprehensively agree. To me, like having a background in, because people that are in financial services, let's say, the first thing, and it's a defensive reflex rather than a logical question, is like, well, what makes you qualified to do this? I was like, well, if you want to compare case studies, I'm happy to do that all day long. But then the other thing is, one area where coming at it from more of like a creative, emotive, like in terms of empowering other people, where that gives you an advantage amongst other areas, is, well, like screenwriting in particular. And I was also a philosophy minor, so like syllogisms. It's mostly about structure and concision. And so how much power can you pack into this structure while still being concise is a really good and helpful way to frame a course.
Do you want to give me an example of that? Are you talking about like metaphors even? Like, how do you construct a metaphor without...
Oh, 100%. So let's say, I reckon that nothing is more difficult to write than a quality satirical or comedic movie. And so like a 90-page screenplay that is actually hilarious. So it gets done what it needs to get done on a story level, but with enough color and pop and satire that it really like pops off the page and says something. Ridiculously hard to do. And so similarly, and this is a thing that you see when you have a writing background and then you step into the wild west of online education, is you see these people marketing like, we have 850 hours of content. And it's like, that's not good. That means that you just bloviated into a microphone like undiscerningly and then didn't edit anything. And so for me, like if you can, like the more, like to your point also that you made, like a pill that's fun to swallow, that is actually what is effective here, not this thing that sounds impressive. It's like a 3,000 page leather bound tome. It's like, wow, there must be a lot of wisdom in that. Like, that's false advertising in a way, just literally reading a book by its cover ineffectively. Like, actually, the most quickly that you can careen someone through the transformation, and the more fun you make it for them, the more valuable it is. And to that degree, I would share that some people that I've worked with lately, and also just in general, um, I get particularly excited when they start talking about not only have they dialed this in, but now they're starting to take these sort of like exercises that I put them through and run their kids through it. And now they're having rewarding conversations with their kids. Like someone that I'm working with right now, he said that he has his son who has ADHD doing the dirty work on video game research. So he's doing like deep due diligence, not just on the games, but on the companies that make the games, bringing these reports back to his dad, who's then synthesizing it, and then he's having conversations at a higher level with, for example, like a daughter who is head of social media for a company who has all of this visibility that she currently isn't monetizing into where the world is going. And so basically, when somebody is able to take it, internalize it, bring it on board, but then pass it on to their family tree that's willing to listen, like that's when it actually starts to become truly powerful. And at the core of that power is that it is concise, simple, and also really fun.
Maybe now is probably a good time to sort of describe what you do from maybe even from a legislative point of view, because I fall under the jurisdiction of a whole bunch of rules because I'm a financial advisor. And if I call myself that, just like a doctor, I probably better know what I'm doing, but also have to subscribe to a certain set of things. What you're doing is purely just financial education and coaching. Would that be correct?
Absolutely. I think you would call it essentially an alternative education service or an alternative consulting service, where, to be really clear, I'm not anti these industries existing, but in the context of creating the transformations that I'm talking about, I have sub-zero interest in collecting someone else's money to invest it for them, or telling them exactly what to invest in or how much to invest, or any micromanaging of what someone else is doing. What I'm looking for and who I'm able to help are people that are like I am, and I have some ideas about this that we could get into, but basically, among other things, somebody who's like, I really don't want people or entities telling me what to do, but I just do not see a viable alternative. And I don't see how to sanely do this myself, especially when you consider the stakes that I'm interested in playing with. And so people like that want the tools to be able to step into a permanent independence is a good fit for this. And anyone who's not, and there, as we've talked about really effectively and thoughtfully multiple times now, there are plenty of people who aren't going to be that and maybe shouldn't be that. And in which case, a stock newsletter, a financial advisor is the right fit. But the reason that this exists in the way that it does is I feel that there should be a really powerful alternative. And it's a little bit like another writing maxim of write the book that you wish you could read. I created the service that I wish I had access to when I started in 2006.
I want to dig into the different types of people that you typically encounter, because we're not all homogenous people. There's all sorts of differences and quirks and features with each certain personality type that makes it more challenging than others as an educator to communicate to them, right?
Oh yeah, for sure. And that's where, I mean, like a really good line when I was thinking about, because I blew up a trajectory of like writing screenplays and books to do this. Maybe I'll return to that one day in the future, but I really, like, it was a thoughtful decision, and I was thinking deeply about stepping into teaching, and I sought out some people in my world in like LA and New York and some other places that I knew were teachers, and to see what they had to say. And the one thing that just stuck, it will stick with me forever, is it just seemed so true before I had any teaching experience. He was a math teacher in LA, and he was like, the problem with most teachers is that they love their subject matter, but they hate the human race. And so like bringing a curiosity about people is so incredibly important. And if you can't bring that curiosity, I mean, you just won't be doing this very long.
Let's talk about some of the client types that we're typically going to come across. You see them, you have some amazing names for them. So let's go down some of the lists of people that you encounter.
Yeah. So, I mean, plugging our amazing collaboration this time last year, it was the Courageous Everyday Investor. Really good conversation. That you putting that out drove some absolutely fantastic people into my world, and then also some, like, it was in the minority, but some frustrating. And to me, like, you, because if you care about people in development, you're like, could that have been prevented? How could that have been prevented? Type situations. And so, based on that, along with hundreds of conversations with prospects and more than 100 collaborations with clients, I have some pretty serious patterns of people that I've encountered in New Zealand and everywhere else, in part because of this podcast, that 10 of which I would say are very, like, should, if you resonate with any of these, it's a green light that if you're feeling like you should go into motion on this, you're ready. It's just a question of believing that you're ready, getting some great support, striking that right sort of audacity and humility balance where you have enough audacity to believe that you can be helped and enough humility to ask for help, which can be quite elusive for people, along with 5 types that, unless something changes in the way that things are structured, you should probably stay far away from this until something seriously changes in terms of either your psyche or your financial reality or both. And so the first one, and of course, I'm curious with you, any thoughts that you have on these, kind of a public brain?
I might have different names for them, but
Yeah.
this will be interesting. Yeah.
And but the first one would be the new and nervous parent. And so this is one that I've seen, and actually my first client collaboration, which ended up being really successful, as a good example of this, is someone who has been quote unquote wanting to learn how to take the reins for years, but there hasn't been that sort of in extremis moment where some part of you is struggling to breathe and you know that you need to make a change that actually compels you to make a change. And so for them, the catalyst that moves them past that sort of sticking or stasis point is completely positive. It is that they're about to bring a child into the world. And the basic thought process, as far as I can tell, is I don't see how I can raise this kid with a straight face, look them in the eye and tell them how things are and how to act in this world, if I myself am scared of my own income, my own net worth, because I have no idea what I'm doing. How can I raise them to be an independent person if I don't feel comprehensively like an independent person? And so the people that have felt that and then they've owned it and they've taken it on, that they're like, I'm going to resourcefully solve this one way or the other, that have come in and sublimated the pressure of that into opening up new doors for themselves, have come in and done really well. And usually once you kick that door open, then it also opens up new doors for you as a person. So as an example, I worked with this fellow, Jerome, in 2016, who basically had been having, like, parents manage his inheritance for a long time, took it back under possession and multiplied it in such a way that not only was he confident in how to raise his kids and how to sort of manage the family estate, but he ended up leaving his job to start his own company while putting that in motion. And so when someone actually feels that right pressure and they harness it the right way, sky's the limit. But until they do, there's going to be this creeping guilt. Like, imagine if you didn't have confidence with money and you were trying to raise up your kids. Like, what would that feel like?
Futile.
Yeah.
To be honest.
It was a very bleak answer.
Could we get more dark on that one?
Yeah.
No, like it would be, and it happens every now and then. Like, there's some questions that you get asked as a parent that really cause you to think, like, oh my goodness, I've never actually thought about that even for myself, let alone how to explain that. But it goes beyond that, because you have to explain it, but also demonstrate it.
Mm.
So I remember when I was a kid, my brother just said to my parents, who said to him, oh, we can't buy that because we don't have money, which is a phrase that we outlaw in our family.
Oh, wow.
Never, because of what it does to your brain. It turns off creativity and you can't solve the problem. But he said that, and because he thought that, well, you just go to the bank and you get money, which is kind of true. But he kind of thought that, and my parents probably didn't have a very good answer for him. And so I've remembered that. Like, I was probably like 6 years old when I remember hearing that. And so now when my kids ask me anything to do with money, I'm ready. I look forward to it. And it's something that I consider it's one heck of a challenge. But from your perspective, like, how likely are those new and nervous parents to engage in a process like what you offer? Are they the ones that are less likely to engage because of either it's just too expensive or it feels like it's too much of a commitment?
Yeah, talk about a term that turns off creativity is it's too expensive.
Yeah.
If they're in that headspace where like investing in your own investing education is an expense rather than an investment and like a burden rather than an opportunity, it's already over.
That's right.
That's an interesting area where, yeah, and it's so interesting that you are like in the most constructive way possible, like serving as a despot over language, whereas like there is none of this language in this house. You like kick out anything that
Oh
closes
yeah, we used
off
to have so many
creativity.
children, but I got rid of most of them because they kept on saying that. Yeah, totally.
Well, that also brings overhead down, so
Yeah, that's true.
effective. But it's all like basically my questions would be how nervous are they and how resourceful are they? How brave are they feeling? Are they feeling ready to do this? And then the other thing, and actually I guess I'll hopscotch around
Yeah, go
these.
for it. Go for it.
So there's one that is not suited to do this until they've put their house in order, and that I have that written down as the mismatched matrimony. And essentially what that is a two, I mean, in 2023, I guess your language needs to be more open. So two people that are married in whatever configuration and their life partners, and I'm sure on a day to day, they figured out how for things to go smoothly. But when it comes to zooming out, looking at the bigger picture, what is the trajectory that we're on? What are we dealing with right now that is unacceptably tedious or just not what I want to be dealing with in 10 years? What are the opportunities we want to capture that I don't want to be 85 in the rocking chair complaining that I wish I had had the clarity or the moxie to go for this? Like what are these things? And they just for whatever reason have not broached these conversations with each other. I'm reminded of a rather cheesy but also rather beautiful quote from the guy who wrote The Little Prince, which is that love does not consist in gazing at each other but in looking outward in the same direction. They have no idea what that same direction is. And so for me, and just to put it point blank, because for me this is turning into a no-fly zone and it's the one of the few areas at this stage of the development of my program that I run into the same sticking point. I'm like, how do I make this go away? Is people who kind of like run through my gauntlet, ask for an hour of my time, and haven't clarified anything as a couple about what are the risks they're willing to take, what is the shared vision, etc. And so for me, that is a complete non-starter, because with something of the level of investing with the intention of creating a life-changing and potentially like intergenerationally changing nest egg and skill set, if you're not on the same page, it's a no-fly zone. And so on the exact opposite of that was I remember this time last year roughly, I was talking to a husband-wife combo, and their priority A was getting him out of sort of an unsustainable back-breaking routine as a veterinary surgeon, and she was at home raising a child as an entrepreneur as well. And when I took them through and I put them in a position where they could pounce on this, but they needed to do something bold to start taking action on this now, or they could just defer this forever into the future. Maybe they'll get to it someday. They sat in silence, and I could feel in particular him contracting into himself. And I was like, this is one of those moments where like they either like come together as a team or they pull each other down. And she leans in after like maybe a minute of silence, and she just goes, do it. And then she emboldened him to take action on it. And then as a team, they dismantled it and they changed their trajectory. But it would have been just as easy for her to just blow in the opposite direction, and it wouldn't have happened. And so for me, your choice of partner, and of course, that being said, there are moments where one partner is totally doing everything. And actually, I have something along those lines as a type, but it is vastly preferable to be on the same page with your spouse, and for you to have made a deliberate choice about the targets that you're aiming at, the problems that you're there to conquer, and the division of labor, where it's like, I'm solo driving and you're either mute in the back seat or you're kind of my co-pilot. Like those decisions have been made. And if they haven't been made, you're in that mismatched matrimony, and you're in a position where, and I've seen this happen, even though I worked so hard to preclude it doesn't happen often, but what we don't want is for you to start making focused investments, even if you're prepared. If your spouse who said that they didn't want to be involved starts berating you at the kitchen table every day because the stocks are down, despite that this is long-term, despite this is everything, that is where, if you've actually like taken real skin in the game while still being mismatched, it actually becomes not just financially dangerous, but psychologically dangerous.
A kingdom divided can't stand. Two can't walk together unless they're agreed. It
The
shows up.
divided kingdom is a better one.
Yeah, that's right. Because you're right. Like, if there's somebody that didn't get the memo, you were sitting in the same meeting, but maybe you weren't quite listening at that part of the meeting, right?
Mm.
And that means that you haven't actually conquered that fear of what happens when markets tank. You're now going to be reaching for the sell button, and your better half is saying, ripping your hand away. No, we talked about this. And they're like, I didn't talk about anything. This is, this is new information that wasn't factored in. We need to pull out. Right.
Mm.
So there hasn't been the equal buy-in, I guess. And that's something that when the pressure comes on, you're either going to see it or you're not. And it's hard to spot it sometimes, right? But there's like lots of manifestations of this, isn't it?
Absolutely. And that's a thing where, yeah, for me, I mean, like the first piece of like the Find Fat Fish gauntlet is a call with me personally. We're getting clear on sort of what I call point A and point B. And so what you're currently doing, what's feeling like it's not working, the consequences of inaction, if any, and then getting clear on where you want to be. And it is very frustrating to me when someone says that their spouse doesn't need to be there, and then it turns out that
totally.
they did, because it's like, to
They
me,
always need to be there.
it would be so much better for them to be there and totally like half in, half out, be like, okay, I understand. Now you get to it. Than for them to not be there and then be like, wait, what's happening? And then freaking out. And so, yeah, just joint buy-in, like you said, a united kingdom by any means necessary is such an important intention that I promise is set in very few marriages.
Yeah. And you don't have to be perfect to play the game, but
No.
it's just like, if you agree to do something, like there's always going to be one person that has a little bit more emotion power behind it, or they're better at seeing the objective. That's another thing. Like some people are just so much more focused on the objective, whereas the other will be looking at the steps. Some of them will be looking at, hey, this destination that we're trying to get to, that's going to bring me comfort. Whereas the other person is going to be looking at it going, well, that's actually a good platform to go and do something better with that. And so you get all those different little nuances in relationships, and ideally it's going to be a win-win because no one has all the answers, and you need to have some degree of tension within your relationship. But when you're working with people, with what you do in your course, you're trying to put the acid test on because we're talking about a massive outcome that is theoretically possible only if there is absolute buy-in to the process, right?
If you fall apart midway through the process, you would be so much better having never done it at all. That's exact conviction is at the core of it. And as we've talked about on numerous occasions now, sort of informed optimism, where, and 2 times now I've explained this and I've dropped a syllable. I would like to redeem myself. So in explaining this, there's 4 types of information. You have uninformed pessimism, which is useless kind of just in everywhere. You have uninformed optimism, which is dangerous and everywhere. And then you have informed pessimism, which is useful, but it keeps you kind of stuck in place. Here's what not to do. Okay, but what do I do? And then lastly, you have informed optimism, which is blue rare. Hardly ever see it. Very few people are in active possession of it. It is those couple of slices of insight or information, knowledge, whatever the case may be, that enables you to take aggressive and patient action when the rest of the world is paralyzed. On a stock picking level, probably also on an investing level, one of the main pieces, if not the main piece of Find Fat Fish teaching people stock picking is how do you independently find and know that you found those pieces of informed optimism that let you actually do something, and then how do you act on that in a way that is congruent with your goals and supremely likely to get you where you want to go without overextending in terms of time or risk or whatever the case may be.
So the uninformed optimism, I guess, is analogous to being at the peak of Mount Stupid in the Dunning-Kruger effect, which we talked about this before we hit record. So that's kind of like where you feel like you have enough information to be dangerous, right? Like you can actually get out there and you feel like you can do this because most people can give most things a go, and most of the time they'll get some degree of success most of the time. But sometimes it's actually just luck. Like, for example, people that will buy homes, renovate it for the first time and then flick it off for a gain during a rising market, they'll take credit for what the land is doing on its own. appreciating.
So that brings me to another type that
you.
I think unless there is in this case, purely a psychological transformation, they are in a very perilous place. And I think you could say at the peak of Mount Stupid, and they're about to careen down that Dunning-Kruger graph. I have it down as sort of the delusional invader. And so that is somebody who, like, for me, I do not put any stock, let's say, in my ability to predict the quote unquote market. I think that most people that are talking that way and actively backing that are turning what could be so simple and so predictably effective into something very precarious and dangerous for themselves and their families. But however, I had hundreds of conversations with people in 2021, and there was like a 2 or 3 month window in particular where it felt like almost everyone I was talking to was saying something along the lines of, well, I opened a Robinhood account 2 or 3 months ago. It's up, I don't know, 15, 20%. And I don't want to sound immodest, but I suspect that I'm a genius. And I'm like, okay, so why are we talking then? And they're like, well, okay, if you really need to know, I'm concerned that maybe this is luck. but then they hadn't experienced any kind of discomfort like proper discomfort that would cause them to make an adjustment. And so then you see that the quote unquote market falls off a cliff, and you had all these people that were thinking that they were investing, but actually they were operating with, you couldn't even say the strategy, but essentially like the whims of someone who is accidentally trading for the short term in stocks when they think that they're investing for the long term in companies. And whereas somebody who's clearly in their lane as a trader knows what they are and aren't doing, and someone who's clearly an investor knows what they are and aren't doing, they're in this weird sort of invader place. And so those people, I promise you, all got scorched by the drop. They got exposed that they didn't know what they were doing if the market went down in a serious way. And so for me, if you are in the situation of you haven't quite found, it goes back to conviction and staying power, you haven't found the ability to actually stick to your guns when stocks fly up or down. You come to pieces, you end up panic selling in either direction because it's scary on the way up too. You are in this sort of no man's land of neither trading nor investing, and you need to figure out, and there's nothing wrong with just getting field research and trying things until you have turned this to your interpretation. But if there's real stakes, you are better off getting support quickly, especially if there's real skin in the game. You need to figure out which lane you're in. And if you want to play both games, what sort of the risk and time commitment stakes are for each game.
Okay.
And I talk to a lot of people that are like, I don't really know what I'm doing, and yet I can't stop myself from doing it. And it's like,
Yeah. I call it lettuce hands. And I don't know if it's the right term. And so lettuce hands would be like really strong and firm when it's fresh, right? Really confident when the market's good. It's just been harvested and whatever. But yeah, it goes wilty pretty quick.
That is such a good, that is beautiful.
Under a little bit, under extreme circumstances. It's also, there's something about this taking risk for risk's sake. And there were a lot of very smart people on the various Facebook groups, 2020, 2021, a little bit of 2022, which were exactly these delusional invaders that you're referring to. And they were really smart. Like, you're teaching me stuff here. Like, that's all the hallmarks of being someone who's half intelligent, where people are learning from what you're doing and probably not suffering too much. But it was just this subtle sort of twist in things where it is a game, and what it is that they're hunting for is not the opium, what's it called? The endorphins, right?
The opiate effect probably also checks out.
Yeah. That's all they were doing. They were risk takers for risk's sake rather than actually.
That's a really good observation. And that is something that comes up too when you do a good job of asking a smart question, listening carefully, and then repeating the process to try and help them come to their own realizations.
Right.
Is usually that kind of inquiry will show them that they're not sure what is priority A. Is it actually like fruition, or is it merely excitement? And like, is this entertainment? Is this education? Is this transformation? Like, what exactly am I doing
Why
here?
are we doing here? Are we just playing a game?
And if you're doing that when the stakes are 5, 6, 7 figures, what? And that's the level of emotional disorganization. And that's exactly right. Is they could And they probably are throwing like syllogism after syllogism at you. They're well researched. They read a ton. They're up on short-term trends, evergreen principles, et cetera, et cetera. But they're so emotionally organized that in terms of marshaling that battlefield of knowledge, they're doing it completely ineffectively.
And when you've got that mismatched matrimonial piece going on, typically that's one party to that.
And they might not even be willing to. And this is the thing, that it comes up is like, what are you doing that you wouldn't even share with your partner out of shame? And if you're in that country, we can be assured that something or multiple things are deeply broken and deeply in need of repair in short order.
Yeah, great. Give me another name. What else have you got?
Yeah, so I touched on this before, and this has actually been, I would say, there's been a heavy element of this in New Zealand and Australia in particular, is the exhausted daredevil. And that is somebody who similarly, they prefer life at high speeds. And so I say that like people who love flying things or flying off of things, if they come in and learn a system that helps them sort of aim their brave and audacious and bold energy at the right target with the right sort of if-then plan, their ability to, if you can help them zoom out and look at the forest and then zoom back in and just on their own race amidst the trees, they're terrifying once they're properly armed. A lot of the best success stories in Find Fat Fish are these people. And another major part of the reason why they do so well when they're properly armed and motivated is that they've probably been doing some kind of work that started out flashy, exciting, lucrative, but now has become kind of just like a rut. And not just a rut, but like a depreciating rut where they're not going to make more money and their bodies and maybe their families also are breaking down as a result of an unsustainable commitment. And so as an example, like I've worked with people, again, these would all be listeners of the show that reached out, somebody that was working in the guts of a cruise ship, which is a much more dangerous environment, I learned, than you might think. Somebody who's working in a mine, some guys who fly to Papua New Guinea 6 to 9 months out of the year to like do repair and fly helicopters.
See, I know some of these people now that you're describing them.
Yeah, I'll bet.
Hello, everyone. Yeah.
Hello, I would drop your names time permitting, but I'm thinking of you. Yeah. And basically they all have so much in common that they are probably wizards in terms of getting things done in the short term. And they have thrown themselves at trying to learn this, but there's just something about the bigger picture that is thwarting them. And the problem is, if they don't solve it, they're going to be and continue to feel like sinking ships, like I said, in an unsustainable situation. And so they're like, like I bend over backwards and I have to leave my family for stretches at a time, et cetera, to be making this like handsome salary. But I'm not at a point where I can be squandering not only the money, but the opportunity anymore, because I don't want to be doing this 30, 40 years down the track. And then they also typically have some sort of an anti-model, like the sort of elder statesman on the job that's been there way too long and isn't doing anything about it. They're drinking their body weight in whiskey and just kind of drowning their questions. And they're like, I can't be that guy. And so I found that people in that set of circumstances that properly, just like with the new and nervous parent, they properly sublimate that energy into a productive focus, crush the psychological transformation, and move much more quickly through progress in the real world than a lot of other people.
How do you, for example, work with those exhausted daredevils to get them excited again? What would you do?
Oh, interesting. So yeah, to me, it kind of goes back to usually the problems that they're running into are entirely because they, like, as I say with Find Fat Fish, and it's taken me a long time to arrive at these 3 boxes. I only work with amateur investors who have urgency, solvency, and gender ambiguous balls. These people are typically like gravitating towards stuff that just scares the bejesus out of normal people. Like, to me, and this is a counterintuitive thing, but like the average nurse is actually wired to invest better than the average doctor because of their anti-risk averse. They're probably gravitating towards cage fighting, shark diving, jumping out of planes, this kind of thing. And then that kind of boldness applied to investing is actually much more important in terms of long-term focus investing than, say, memorizing The Intelligent Investor. It's just way more to do with being able to follow through. And typically where they're coming up short has nothing to do with short-term action. If anything, they're probably doing too much. They're checking stock prices every 15 seconds. They're like overloading themselves. They need help, in particular, zooming out and being like, okay, so what is the time horizon that is desirable and doable in your just gut opinion to be on the other side of this? And how are we goalposting that? What do you need to have in terms of what's missing in terms of confidence or whatever, and also in terms of material, like let's say liquid assets, that enables you to never again trade another minute for another dollar unless you really decide that you want to. So helping them set a clear sort of X dollars in Y years target and then work backwards from that purposefully is one of the major things that they need. But a huge piece of that, and this is sort of very Tony Robbins in that, but for a good reason, is clearly helping them visualize and future pace, and to whatever extent you can emotionalize and capture in specific visions what comes as a result of doing that. And so as an example, I worked with this guy, Dan, in 2018, where he was successfully but increasingly unhappily working in a mine, an aluminum mine in Australia. And he had socked away some money, but he just couldn't stop checking his phone. So he had to hand it to a financial advisor. And he was so unhappy with it because he didn't think that they were doing it right. They were being opaque. He was paying fees. He just so unhappy with it. And he also was really demotivated because he didn't want to grind to give them more money. And so when I told him what I did, he was very enthusiastic and leaned in. And essentially his vision was, I want to be able to retire by 35, which would have been 7 years out. And I don't just want to be sitting on my hands. I want to be traveling the world, training jujitsu in particular, like with the most exciting people in the world. And that was his vision. There's no wrong vision other than the vision that isn't clear or right for you and that isn't sort of in line with your spouse if you have one. But that vision was enough to galvanize him to essentially turn 5 figures into 7 over the next year and a half. And you can't promise that kind of timing. But what you can promise is that there are adjustments that people like that can and will make that put them in a position to have that be a probability, where like that vision becomes a long-term probability rather than something that'll never happen with their current action diet.
Yeah. So put them in a position of maximum potential benefit.
Yeah. Stacking imbalancing risk and reward in an intelligent and personalized way without squandering sort of money or time or emotional energy.
Listening to you talk, there's so many things that you're saying where like I could substitute the words in my head to kind of give my version of what you just said, but it's not, it's 90% like what you're saying, but it's like, and I guess that's the thing, right? Like when you're getting advice, it just highlights the fact that when you're getting advice from people, regardless of what you call that advice, what qualification, what type of advice that is, you're a personal trainer, you're a mechanic, you're a financial advisor, whatever, it really does depend on who that person is as well as who you are and where you are. And if you have a partner, where they're at. There's a lot to it, right? And it all comes back to that word mindset. And 90% of what I do, I'm sure you'd probably call that mindset. And people, when they come to you, when they come to me as well, it would be like results, right? Show me what stocks to buy. Where do I invest? Like these are all the things I hear all the time. I don't tell people which managed fund you should invest in, but I'll teach you how to figure it out, and I'll teach you how to construct it and put it all together and set some goals and see how you're tracking towards it. But before we even get there, we're going to spend a bit of time and talk about who you are. Because if we don't do that, we're building on not a solid foundation at all because of what we're talking about here.
Absolutely. And one of those things, I learned this through sort of a really great coach who taught me, I guess you could call it like best practice marketing and sales and just running a small business, is like embodying sort of who is most like respected in the culture as an authority, and then how can you sort of emulate that in a way that is likely to help people. And so like there's a thing in sales called the doctor frame, and so it's really, really important to bring that same frame that a doctor would bring to a checkup. And part of what's underpinning the doctor frame is certainty that you can help them past whatever their idiosyncratic thing is. But if they're not straight up with you and saying what's wrong, you cannot prescribe a solution. And the concise term for that, I guess, would be prescription without diagnosis is malpractice. And so when people come straight at me and it's like, tell me what stocks to buy, tell me this and that, if you're so good, this should be effortless, etc. To me, it is genuinely prescription without diagnosis is malpractice. And I don't even know if I can help you or if I want to, until I am clear on what exactly is the problem that you're here to solve, and what exactly is that core ambition that you're here to grab. And circling back to something that we talked about a year ago, essentially and there's nothing wrong with either of these mentalities. It's just useful to understand for yourself which one you gravitate to. Is the quote unquote employee 9 to 5 mindset. You're probably prioritizing the painful problem that you want to get away from. And if you're in the entrepreneur mindset, the opportunist mindset, you're probably prioritizing this like shiny, super attractive thing that you don't actually need it, but you need it. And so like, for people, but to identify both and then choose which one you really gravitate to me is best practices. And without those pieces of information, you just, like in my case, it would be irresponsible for me to even attempt to help somebody, because we wouldn't even know the target we were aiming at.
That's good. Yeah. Okay. Let's do another name.
Sure.
Let's see how many we can get through.
Yeah. So let's do the in strife housewife.
Okay.
I don't know if you're allowed to use those words in 2023. I'm doing my best. We could also say the understated matriarch, but essentially what it is a partner whose other partner, and typically the split that I've seen is the other partner is the quote unquote breadwinner. So they're the person that is outside of the home, driving revenue, trading time for money, typically doing something that on paper is extremely impressive. And then their partner is at home, managing the home. So controlling expenses, etc. And obviously there's many iterations that this can be, but this does show up a fair amount. For whatever reason, the breadwinner is unwilling to even come to the table to talk about in which direction their revenue and their financial life's work is being invested. And so they've dropped it in the lap of who's considered like a housewife and who isn't contributing financially, is now in this position of being like, well, I don't know how to even say this, but my partner isn't willing to be on the phone right now. And like, I do have total autonomy to do this. I wish it wasn't like this, but it is.
Probably a lot of people listening would fit into that category, I'd suggest.
Yeah. And to be perfectly honest and straightforward, I mean, people think about money and investing as mostly being like a math problem and numerically based stock charts. Most of what we're talking about here is actually being able to self-manage emotionally despite massive sort of undulations and vacillations of greed and fear and boredom, etc. And so a lot of the time, these people that have their head in the sand like an ostrich are like an ostrich in a 3-piece suit that is doing something like a professor or an accountant or whatever, where they are so hyper competent in their area. But the idea of stepping into something that they don't understand, being vulnerable and talking about what they don't get, looking in the mirror and being like, I'm not comprehensively competent about money, is just so embarrassing that rather than like I said, achieve that humility, audacity balance where you can like own that vulnerability, but like, I'm going to solve it with your help, so I'm never in this position again. They're just ducking it. That is, I mean, I've seen it both ways, but I would say 80% of the time, the person in front of you is a woman, and the person that's hiding is a man, and a hyper logical one at that. And so, for me, there was a time in the workshop where I was calling it, I think I was calling them the matriarchs, but it was like a cohort of women that were essentially slinging their partner over their shoulder and like doing this. And then basically a lot of them weren't trading time for money. So they weren't driving revenue, but they were ultimately, and they said this, and then they owned this identity. They were steering the ship of where things were going long-term. Because, like if you take a step back and think about compound interest, which is the governing dynamics of what we're doing here, it is like your amount of money long-term is how much you invest times how long you invest times how well you invest. And inside of that, income is only half of one of those things. The lion's share of this is your investing. And so by passing that responsibility to your partner, because you're essentially too scared to come to the table and too proud to admit that you're scared, they are, even though they're not making $1 with their time, they are actually controlling the lion's share of the trajectory that you're on. And so helping people with that, and then beyond that, helping them sort of learn enough and then do enough. I have seen it, and I've also seen it not this way, that through action, they can onboard their kids and then eventually inspire the other person to kind of like creep to the table and start participating, which is really encouraging when you see it. But you don't always see that.
No. Okay. No, I get that. Proud and scared.
Proud and scared.
Yeah. Okay. Wow. All right. Have you got another one? I know you do. You got a whole page there.
I do. So to me, probably the most common one would be what I would call, I'll go with the more PG-13 title, the pooped upon protector. And so essentially that is someone who has been really, really loyal to an institution for a really long time. And they're getting increasingly not even angry, but just sort of like inwardly sad and like fighting that off, where it's like, why is it that after I've given you this much, like my financial prime, so much of my life, and I'm really relying on you more and more to do right by me in retirement, you're treating me as more and more anonymous, expendable, etc. And people like that, who oftentimes they're in their 50s or their 60s, and they are like, I fear that I have aged out of my ability to make a lateral pivot, and I'm being treated unfairly in my current situation. I've stagnated. It's a little bit like the exhausted daredevil at that point, where they're like, this is unsustainable. My income is not going to go up. I need to figure out how to move from like a 2.2% return to a 22.2% return, or I am likely either to never retire and be in this thankless role forever, or I will get unceremoniously fired, fail to move, and then run out of money.
This pooped on protector, is this in the context of the workplace or at home?
Oh, so yeah, this would be, I mean, this
Could
would
be at home as well, I guess.
I could see that, but I mean it more along the lines of somebody who has been working a support role for a Goliath of an institution, who then just gets treated more and more and more unfairly. And those institutions can vary from, say, like a contract role with like a government operation to like a huge financial firm. To me, it's all the same. I recently have worked with somebody who, they're working on paper what would seem like a really flash job, but when you ask questions under the surface, they talk about their employers the way that somebody might talk about like a mob boss, where like, these guys can do anything to anybody at any time for any reason, and if I don't figure out some sort of entrepreneurial chops and figure out an escape route for myself through investing, like this gig could end at a moment's notice for any reason, and I will be unable to sustain my current lifestyle. And so kind of people in that spot.
I know what you mean. That often, maybe this is another word for it, but I see often the people that are in the entertainment industry. I'm not going to say adult entertainment industry, because that's not true. But I see people that are usually in the entertainment space. They're in media for a period of time. They know that their income is phenomenal, but that also comes with it that tremendous amount of insecurity, knowing that it got there through a series of events that maybe they think it's luck. They kind of feel like, I can't really take credit for that, when in reality they are probably worth it.
Yeah.
But they do have this sense, whether it's right or wrong, that it's finite and it could be taken away at any stage. So they need to be doing the best they can. It's kind of the same thing. It's the escape pathway, isn't it?
Absolutely. And I guess the thing that I want to say though, because that is like these kinds of people are typically like fish in water in a bureaucracy, in a hierarchy, in a 9-to-5 structure, which is why they've been there for so long.
Right.
They are really up against it in terms of needing to dial in a skill set that is completely outside of their comfort zone. Is people that don't necessarily love pushing their comfort zone. They love routine and inevitability. Yeah. The thing that I would say that is optimism inducing from what I've seen out of the pooped upon protectors is they do need to experience, I would say, a disproportionate amount of disgruntlement before they're willing to question assumptions, make a change, everything like that. And they'll be holding their breath the whole time, like terrified the whole time. And I'm thinking in particular of Kiwi, maybe about 3 years ago, who was 62, had never invested in anything. As a result of our first collaboration, that one podcast, he bought one share of Apple, and that was his first investment activity in more than 60 years. If they can take the extreme fear and resentment of the situation and sublimate it into a positive direction, no one is better in execution and follow through and being the person that dots the I's, crosses the T's. And so I've seen people go from having no investment experience or confidence to being able to churn out fat fish one pagers, breaking down companies really well in less than a month, because they, not because they were a genius, not because this is like dormant genius that got woken up, but because they took the fear and channeled it in the most useful direction to help them solve the problem that is plaguing them the worst. And that is what we're looking for. And that is, I just want to make it really clear. If you're in that spot, like I feel your pain. I don't understand it, but I feel it, but it is solvable. But you have to be willing to break paradigms to do it, and not to be like unkind, but most of them never will.
Regardless of the magnitude of the problem, nothing happens unless you're willing to come to the party. You can't go to somebody else and expect that they can solve it if you just pay them enough money. No one's going to do this for you.
Well, I mean, exactly. And part of the sort of symptom of being in that is that you're, I mean, famous paradigm. I heard a good episode that you did recently with somebody who applied this to real estate, but the cash flow quadrant, like ESBI, you can't solve this problem by staying on the left side of that quadrant. You need to be willing to pivot over, and they're not going to run a big business. They don't want to, but you need to be willing to think like the people that are employing you and not like the role that you've been in. You can't sort of just like turn up, get the free donut and coffee and show up and get the participation points. You have to be willing to question assumptions and attack the kind of thinking that, to be frank, like they may have been coasting on for the last decades.
Yeah. Future mind for the future world you want. It comes first though.
Yeah.
Okay. So
100%.
Who else we got?
So the next one would be the paralyzed pontificator. It's kind of the exact opposite of the poop to pond protector. That was a lot of P's. Where
let's wipe up the table here just for a second.
Where essentially they're people that they don't struggle in terms of wanting to pursue risk, and they're also not short in their ability to instinctively feel that certain things are going to happen. But these are the kinds of people that are woulda, coulda, shoulding, not investing in Apple in 1995, etc. And they can actually make an extremely powerful and believable case for how they did see it. But the problem is that regret, and then these now future prognostications where they're talking all about current trends, etc., are not being translated in any way into the realm of action. And so we are 100% in the world of theory and 0% in the world of action. And so for people in that spot, it is just a question, kind of going back to what we were talking about, of, because they're also likely to sit down with you and without you even needing to ask them anything, go off about their point A, their point B. They've already thought through the bigger picture. It's just like, how do you help them on the ground so that they actually do something? Totally. And in their case, it is just helping them anchor on one target, not 15, and then give them one strategy, not 15, and help slap their hand away from shiny object syndrome and stuff, and help them just left foot, right foot, take action. And people in this area that are able to get out of their own way in terms of having like an ego about their own intellect, that are actually willing to let somebody in and sort of go through somebody else's innovation to help them unlock their own innovativeness, they will be massively appreciative and like a joy to be around. But to me, it's just making sure that they are, as Einstein said, like keeping things as simple as possible, but not simpler. And they found that consistent and preferably in some way automated drumbeat of guaranteed action into the future. And so get them out of the way of sort of thinking that making something sound sophisticated is the end all be all, and actually like simple and actionable and consistent for them is the end all be all. And people in that spot are capable of tremendous things, because usually risk aversion is not an issue. Certainly creativity and lateral thinking and entrepreneurial thinking, not an issue. It's just translating it into the realm of fruition.
Sometimes it's really hard to get them across though. Do you find, like, out of all the people that we've spoken about so far, do you find that they're potentially sometimes the hardest ones to shift?
I'm glad that you asked that, actually. That's a great insight. So to me, it's like, who of everyone that I've mentioned so far is likely to invent a masterful rationalization? You know, because that's the whole thing. And if you can get someone to own that they sounded so smart to themselves inside their own head every time they decided not to do something, Like, okay, so how do we end this bottomless cycle of you sounding really smart while making mistakes? Like, how do we bring this to a sudden, purposeful, forceful closure for your own benefit? And just see what they say. And and if they can talk their way out of that, they deserve to lose.
That's right. They deserve to lose. Yeah, no, it is possible to shift them, right? But it's like you can't play on that. You can't. It's not just a competition about how smart you are.
But sounds like you have a very particular story in your head to even to think to ask that question.
I've seen it all. I've seen it all, man. But that's part of what I enjoy doing. Like in terms of giving advice, again, it's like 90% mindset. And once people are comfortable with talking about what actually stops them from getting wealthy, that's when it's amazing, because you've just busted down some blockages and barriers. And like, I don't care if I'm right. All I want to do is build wealth in somebody else and hopefully see them do it in somebody else as well. So I've got nothing to win by being right. And I think sometimes when those that are prone to analysis paralysis, when they realize it's not about being smart and technically correct, that's freeing for them too. You're almost giving them permission to not be perfect.
That is so incredibly accurate. And I think it's also fair to say that of everyone that has been mentioned so far, who's most likely to have, let's say, like PhD or MFA or CFA after their names, it's this. And to me, and this is a thing where I'm here to help anybody that has the aforementioned problems and wants to achieve the aforementioned outcomes. I'm not going to like discriminate based on job title or anything like that.
Yeah.
However, it is massively satisfying when you help somebody that people would call like a tradie or whatever outperform these people that are like puffed up and like throwing 7-syllable words as an intimidation tactic, et cetera, but who can often be paralyzed pontificators. But at the same time, if those people want help and they're serious about getting it, and there's a real reason for them to transcend this trap where they're getting by, but they're not thriving and they know it, and they're beating themselves up in their own mind, which is why it's becoming a tighter loop of sort of procrastination and self-defeat. If they're serious about that, I do believe in their ability to be the easiest person to help, where at one time they were like impossible to help.
Yeah, that's good. Okay, who's the next one?
So the next one would be, and we have a friend just up the street who meets this description at a very high level.
All right. Yep.
I'm calling it the will-be windfaller or the inhibited inheritor, whichever you prefer, until you come up with a better one like lettuce hands. But essentially, it's somebody who the pressure that's coming on them is not painful or in like a crushing and limiting way, like with the pooped upon protector, the exhausted daredevil. It's actually a positive thing, but it's being perceived in a negative way. And so it's somebody who has, let's say, like an inheritance coming, or they're at long last, they've been bootstrapping since forever. They're going to sell their business for 7 or 8 figures. And they're like, oh my God, I've never thought about investing. I've just been running a business this whole time. There's people who are, have real estate that they don't want to hold anymore, and they want to let it go and see if they can be entrepreneurial in thinking of different solutions. Whatever the situation may be, there's a windfall that's coming, and they're not ready for that lump sum, and they know it. And so they're probably doing like deep fear-based research on like lottery winners that blew it, et cetera, and being like, how do I not be in that position? And how do I not turn this absolute privilege of a situation into like the worst experience of my life? And so for them, ultimately, what they need more than anything else is to set the intention of having it be that like they know when D-Day is going to happen. They know that on whatever day this money is hitting their hands, and the intention and transformation is that when that day comes, they are so excited about it hitting their hands because they already know what to do with it. And they know how they're going to build on it forever, rather than it hits their hands and now they're completely panicking and they're spiraling in a very wasteful direction in terms of squandered money and missed opportunities. And so for me, I mean, they're in there's a very bleak piece of advice in aspect like arenas and pockets of marketing and sales, which is like you're best off finding people that would have hit a triple without you and then helping them hit a grand slam. I disagree. I like helping people from every walk of life, but people like this that are in this strong of a spot where they're solving by dint of the fact that this windfall is coming, they have urgency to solve it. If they can just summon some courage to ask good questions, make some adjustments and follow through, I mean, nobody's in a more promising position, but will they? And that is certainly not guaranteed.
And when you put a question mark around the solvency bit, not necessarily around, Well, yeah, the question mark could be two bits. So what we're talking about is when they come into possession of that money. So if there's any uncertainty around the timing of when that event is going to happen to unlock that, or the magnitude of what that is, then it's it takes on another twist, doesn't it? Because I'm specifically thinking about inheritance,
Yeah.
where more often than not, I think, yeah, I'd say, well, definitely with the people that I sit in front of, so it's a subset of people, obviously, it feels like people will unreasonably discount the inevitability of an inheritance coming in. In other words, I'm not going to rely on that. No way. Because that's a gift. If it happens, it happens. It's great. It's not mine to say. I don't even want to think about that. And that's noble. There's a little bit of false pride sometimes with that as well. And I think that people might do themselves a disservice by completely discounting something that is probably, at the very least, statistically possible, especially if there is four parties. Like, let's say there's a husband and a wife, and they both have two parents that are alive, but they're separated, and they each have four buckets of potential inheritances, let's say. We don't know when the time frame is. We don't know how much they're going to spend on the way out, and we don't know what kind of arguments they're going to be. So there's a lot of issues around this, by the way. But when it's an absolute certainty that this couple is going to get at least one of those payouts coming through via an inheritance within their time frame, usually it's happening at the commencement of their retirement, usually, just because of age ranges and stuff like that with parents. Usually it's around the same time that the kids are in need of some assistance to get started in the housing market. And almost without fail, that couple is putting themselves under immense stress and sacrifice to get to a landing place at time of retirement on their own steam, without actually acknowledging the fact that they're going to get some help at some stage. And I think it's like another layer of that issue, that they haven't prepared the container for when that thing is coming. They don't know what they're going to do with it. It freaks them out. But also, it's got all this other second and third order consequences. Like, they haven't actually got any certainty around any other aspect of their life, and they're going to risk what they currently have because they're under the burden of that false assumption they've set. You know what I'm talking about?
Yeah, absolutely.
It sounds complicated the way I'm saying it.
Well, I think I understand where essentially they refuse to psychologically and then strategically bring it into the fold of something that they own. And so it's like, consequently, they're actually playing with a very limited toolkit compared to what they truly have. Right. And that causes so many unnecessary complications. And I think the term that you used was, do you say false pride? But some sort of like misused, misplaced ego, where it's like, well, and that's another thing where, like, and would be a whole different episode, but basically all of the self-defeating, deeply embedded beliefs that people have, not just in New Zealand, but worldwide, about money. One of them is, it cuts exactly against intelligent laziness, is like, if I don't grind, then I'm not successful. Like, true. I have to bleed for this to be a win. And disabusing yourself of that notion can make your life so much easier, because life is hard enough, even if you do have the benefit and you embrace the benefit of having certain edges like that. And so just disabusing yourself of the idea that this needs to be hard. And I think the way to do that, like I said, is kind of zooming out and thinking about, what are the things that you have been sort of carrying on your back, and you just don't want to be dealing with that anymore, and it's getting worse, not better. And then where are the things that you want to do, not just for yourself, but for your spouse, for your children, for your bigger picture family, for your community, whatever the case may be, that now this gift will enable you to actualize, if you actually embrace the fact that you're getting an unfair edge and then turning it into something. And if you aren't willing to do that kind of thinking, then I suppose it would just, you could find yourself in a completely unnecessary sea of shame, when really you should be incredibly grateful for the opportunities in front of you.
Hey everyone, sorry for that abrupt finish right when the conversation was getting interesting, as if, right? The whole freaking thing has been amazing. Now, for the rest of the episode, if you want to catch that, you're just going to have to do one more little step with your thumbs. Click on the show notes, go to the very top. You're going to see a link to a YouTube channel. That's where you can get it. There's probably about another 25 minutes of this conversation that you can enjoy over there. But that's it for this one. Thank you very much for listening in. We'll catch you in the next episode. Thanks for listening in to the Everyday Investor Podcast. Like what you've heard, but you want more? Make sure that you've subscribed to our YouTube channel and subscribe to the Everyday Investor newsletter too. The links for everything are found in the show notes that you can access easily by swiping or tapping over the cover art in your podcast player. If you received value in some way, I'd love it if you could take the time to write a review wherever you listen to podcasts. Share it with a friend, or think of our show partners where appropriate. Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand. Gorilla Technology, increasing business success through innovative and strategic IT solutions. And Gero & Co. Financial advice for everyday people building everyday wealth. Remember, some investments or strategies discussed on these episodes may result in financial loss. Be sure to do your own research and ideally seek qualified advice of your own before making investment decisions. Hope you enjoyed today's episode, and we'll catch you next time around.